Once upon a time, Apple was the golden poster child of Wall Street. Apple's stock price simply knew no bounds, and the only direction it seems to know is going north. Why Apple is on a downward spiral lately? While Apple is still amongst the giants of the tech industry, this past week has given Apple's shareholders a torrid time, and certainly brought some imaginative minds back down to earth. Fast and hard. Apple's stock price has now fallen a fair bit below its 200-day moving average for the first time ever since 2013. This happened right after the company has announced record-breaking quarter revenue, beating top and bottom line estimates by a good margin. To many investors, this might seem absurd. Why would the stock price of a great company like Apple fall so steeply upon a piece of news that is worthy of celebration instead of despair? The truth is, Apple always performs. In fact, Apple always performs so well that in the eyes of investors, performing well is not good enough. When Apple announced that they beat analyst forecast, investors became concerned that the rate of growth was slowing down, not whether the company is actually growing or not. In view of this, small dents or stains on an otherwise perfect quarterly report could quite possibly trigger a panic to sell. Here are a few dents that we managed to pick up. 1. Lower iPhone sales. The sales of Apple's flagship product, the iPhone, has reported lower figures than expected for the month of June. Apple reported that it sold 47.3 million iPhones, 35% up in iPhone sales from previous year. But it still fell short of analysts' prediction of 50 million units. 2. Pessimistic pipeline. Leaked iPhone 6s specs, which is widely expected to be unveiled later this year, showed evidence of only incremental improvements to the camera and processor speed. This, together with the company's weak outlook for the coming quarter, comes as a massive disappointment to bullish investors. 3. They're showing in the Far East. Market research has shown that iPhone's market share in China has dipped to third place, behind locally famous brands such as Xiaomi. With the Shanghai index tanking south in the past few weeks, investors are not optimistic about the Chinese consumer market's spending power to buy a relatively high-end phone like iPhone. As many analysts have pointed out, the numbers in the quarterly report are extremely strong. However, when evaluating the trend of a powerhouse growth stock, such as Apple, a strong financial statement is not enough. Every single step the company takes is heavily scrutinized and watched. A little rustle in the grass is able to trigger a landslide. To all Apple investors out there who are in for the long haul, Apple remains one of the strongest and most solid businesses in the world. While it might have missed analysts' estimates, one cannot help but think that analysts are but outsiders who ultimately play no role in the strategic decisions of the company. To truly appreciate the growth potential of a juggernaut like Apple, you need to dig deep in financial evidence and judge the leadership capabilities and the vision of Apple executives. Now that it is growing 35% year over year, as well as compiling $1 billion in revenue per quarter, Apple is showing every sign that its recent fall from grace is nothing but a temporary phase.